Hold on to your wallets, folks. We're on the brink of a potential $20 trillion Bitcoin and crypto price boom. Bitcoin and other cryptocurrencies have been growing at a pace that's nothing short of significant this year. Much of this growth is fueled by the Federal Reserve's plans to restart the money printers, coupled with China's impending fiscal injections into the global economy. Let's take a moment to take stock of the situation. The price of Bitcoin, for instance, has more than doubled in the past year. This exponential growth has led to whispers, rumors, and speculations about a secret sovereign Bitcoin bid. Now, isn't that a tantalizing thought? But wait, there's more to this story. One name has been making waves in the cryptocurrency market: BlackRock. Their potential involvement could be a game changer, an element that could transform the landscape of the crypto world as we know it. When you have one of the world's largest asset management firms dipping its toes in the crypto waters, you know things are about to get interesting. But the plot thickens. There's talk of a predicted Federal Reserve bailout for President Biden in 2024. Now, this isn't a simple matter of politics. This proposed bailout could be the catalyst that brings about a tsunami of changes in the Bitcoin price and the broader crypto market. With the Federal Reserve's predicted bailout for President Biden in 2024, we could witness a seismic shift in the Bitcoin price and crypto market. After all, in the world of finance, every action has a ripple effect. And this ripple? It could be a wave that's $20 trillion strong. The Biden bailout, a term that could become synonymous with market chaos. Let's delve into this intriguing topic. This move, while intended to support the economy, could potentially wreak havoc on the markets. It's no secret that President Biden is navigating a complex economic landscape as we approach the 2024 election. The Federal Reserve, along with Treasury Secretary Janet Yellen, have been working diligently to manage inflation. They've been lowering their forecasts, hoping to keep the economy on an even keel. However, there are whispers of a looming recession. These whispers aren't just idle chatter. They are harbingers of potential economic upheaval. And if these predictions come true, they could spell trouble for Biden's popularity at the polls. The president's approval rating often hinges on the state of the economy. If the public perceives a weakening economy, this discontent often reflects in the polling numbers. So, a potential recession could be a significant hurdle for Biden as he seeks re-election. Despite this, it's crucial to remember that what spells chaos for traditional markets could mean opportunity for others. The cryptocurrency market, for instance, could stand to benefit significantly from this potential upheaval. Cryptocurrencies have shown resilience in the face of economic turmoil previously. They've grown in popularity as alternative investment options, with Bitcoin leading the charge. This potential market chaos could provide a ripe environment for cryptocurrencies to thrive, as investors look for safe havens and opportunities for growth. So while the term Biden bailout may send shivers down the spines of traditional investors, it could be music to the ears of crypto enthusiasts. In the face of potential recession, the crypto market stands to gain. Federal Reserve Chair Jerome Powell's recent remarks have sent waves through the stock and crypto markets. Dive a little deeper into the financial world, and you'll find the Federal Reserve, or the Fed as it's commonly referred to, wielding an influence that's nothing short of monumental. Jerome Powell, the chair of the Fed, has been stirring up quite the storm with his comments recently. His words have not only shaken the traditional stock market, but also the burgeoning crypto market. The Fed's stance, often described as dovish, points to a softer approach to monetary policy. This means lower interest rates and, in turn, a weaker dollar. Now, this might sound like bad news for some, but let's turn our gaze to the year 2024. It's being predicted that the dollar will further lose its strength. And while this might seem like a cause for worry, there's a silver lining, especially for the crypto enthusiasts among us. You see, a weaker dollar often leads to a rise in alternative investments, and cryptocurrencies are right at the forefront of this shift. So, the weakening dollar might just be setting the stage for a crypto boom. But that's not all. There are a couple of other factors that might just tip the scales in favor of cryptocurrencies. First up, we have rate cuts. Lower interest rates make borrowing cheaper, encouraging spending and investment. This can boost the economy in the short term and may also lead to increased interest in high-risk, high-reward investments like cryptocurrencies. Next, we have the upcoming Bitcoin halving event. For those not in the know, a halving event is when the reward for mining new blocks is halved, meaning that miners receive 50% fewer Bitcoins for verifying transactions. This reduction in supply often leads to an increase in demand, and hence a potential surge in the price of Bitcoin. Lastly, there's increased election spending. With the 2024 elections around the corner, there's going to be a lot of money pouring into the economy. This increased spending can stimulate economic growth, which again can lead to a rise in alternative investments. So, as you can see, the pieces of the puzzle are coming together. The dovish stance of the Fed, the potential rate cuts, the Bitcoin halving, and the increased election spending, all these factors are aligning, and they point to one thing. As the dollar weakens, the stars align for a crypto boom. The Bitcoin price has seen a dramatic rise this year, following a prediction of a major crash in 2024. In the wake of the crash, Treasury Secretary Janet Yellen has been hard at work trying to stabilize our financial markets. Her strategy? Increasing US dollar liquidity. Now, in simpler terms, this means she's working to ensure there's enough cash flowing through our economy. The aim is to provide a safety net, a buffer if you will, to protect against the fallout from the crash. But it's not just about damage control. By increasing liquidity, Yellen is also helping to fuel economic growth. After all, when there's more cash in the system, businesses can borrow more easily. They can invest, expand, and create jobs. And when businesses thrive, the economy thrives. It's a ripple effect. Now let's talk about inflation. It's been the big bad wolf for economies worldwide, and the US has been no exception. High inflation rates can erode purchasing power, and that's bad news for consumers. But Yellen predicts a sharp decline in inflation in 2024. If her prediction holds true, this could have a significant impact on interest rates. Lower inflation generally leads to lower interest rates, and lower interest rates can stimulate economic growth by making it cheaper to borrow money. Again, it's all about making it easier for businesses to grow and thrive. But what does this mean for Bitcoin and the crypto market? Well, a thriving economy can increase investor confidence. And when investors are confident, they're more likely to take risks. They're more likely to invest in assets like Bitcoin. So, in a way, the crash could create a perfect storm for the crypto market. As the economy recovers and investor confidence grows, we could see a surge in demand for Bitcoin and other cryptocurrencies. As the dust settles from the crash, the stage is set for a potential $20 trillion Bitcoin and crypto price boom. The future of crypto is in the balance, with potential gains like we've never seen. As we look ahead, the looming economic challenges present a paradox of concern and opportunity. The U.S. economy has so far managed to avoid a recession, but signs of a downturn could potentially harm the president's poll numbers and the overall confidence in the market. Yet, this very chaos might be the catalyst for a crypto market boom. With the Federal Reserve and Treasury Secretary Janet Yellen lowering inflation forecasts and working to increase U.S. dollar liquidity in the financial markets, the stage is set for a potential surge in the crypto market. The Bitcoin price, which has risen significantly this year following a major crash, could be further buoyed by these developments. A weaker dollar forecast for the year 2024 could mean stronger cryptocurrency prices, and the crypto market could see a $20 trillion boom. In the eye of the storm, the potential for a crypto boom is a beacon of light. And while the uncertainty of the future looms, one thing is certain. The world of crypto is poised to make some major waves. In the face of economic turmoil, the Bitcoin and crypto market could be poised for a $20 trillion boom. Only time will tell.